Hi, this is Lauren with Verivest, and today we are speaking with Heather Dreves from Secured Investment Corp. Welcome. We're really excited to speak with you.
Oh, thank you. We're super excited to be here.
Absolutely. So I'd love to hear, how you got started and how you ended up where you are today and a little bit of your origin story.
Absolutely. Well, I've been with Secured Investment Corp a little over 9 years. We have managed real estate funds for 9 years. So we explored the fund management option when I came on board. I actually have an interesting story. I came from an existing private lender and helped manage a portfolio and raise capital for that company. So came on board, like I said, a little over 9 years ago. And, we quickly learned that funding one-off trustees with one lender here and there was very clunky, not only for us as a company, but also for our borrowers and brokers. So we decided quickly to open up funds and went into the fund management business. Our company is a little bit unique because not only are we fund managers and a private lender providing funding for real estate investors, we also educate people on how to actually invest in real estate. So we are a very organic company in that sense. We get a lot of deal flow from our clients that go through our education side of our business. Our founder got started over 25 years ago investing in real estate and quickly learned that it's easy to find the deals, but the big challenge is finding the funding for that. And then also we have a lot of clients that just want a passive, stream of income. So it was a natural progression over to the fund management side of the business.
Absolutely. I love the education aspect of the company. That's really great that you guys provide that for your clients.
Yeah, that's a big part of our company.
Right, absolutely. So please tell me how you source deal flow and explain a little bit of your acquisition strategy.
Absolutely. So we target acquisition funding and also refinance funding for real estate investors that are either purchasing or refinancing residential single family 1 to 4 units. So one of the things that we decided a long time ago as a company and a fund management team is we were really going to focus on what we knew. And we practice what we preach. We teach people how to find those residential deals, 1 to 4 units. And that's what we provide funding for. That's what we put on our funds. We're not trying to be everything to everybody. So we don't do any commercial or anything like that. We really stick to the residential side of things. All short-term debt. So the people that we provide funding for are going in, buying distressed properties, residential in nature, non-owner occupied, and we're providing the funding to purchase those properties and then also to rehab those. And so those are the types of deals that we source and that we're looking for.
And with those deals, what would you say are the key markets that you operate in and why do you select those markets?
Yeah, so our funds are a little unique because we actually diversify the funds. So we do take 75% of the fund balance and we invest those monies into loan originations for these real estate investors that I just spoke of. And those are nationwide. There are, 4 or 5 states we are not lending in, but we are not specific to one specific market. But that doesn't mean that we also don't look at the markets. We have several counties that we limit the LTVs on. We've lowered them because they're tougher markets. So it's not to say that we just lend everywhere, and with no intention or strategy. We do look at that. 75% of our fund balance is in those loan originations. And then the other 25% of the fund balance, we actually buy real estate and fix and flip properties, but that is specific to the Pacific Northwest. So we mainly buy properties in Spokane, Washington, and we've actually just added Coeur d'Alene, Idaho to our portfolio. We are located in beautiful Coeur d'Alene, Idaho, and if anybody's read the Wall Street Journal lately, it's a really hot market. But we stay in those specific markets because we have our own contracting crew. We can control the projects. We believe strongly in investing. When we say investing, buying real estate where you're at. And so we practice that also.
Absolutely. I was reading an article kind of as you mentioned earlier that, was going over kind of the adjustments of the market after the pandemic. And it stated that Idaho was the most moved to state
It's very popular right
which
now.
I was just shocked by that. I definitely did not think
Yeah.
that Idaho was the number one state, but that was really cool to.
Well, I believe Coeur d'Alene, Idaho was number one, and Spokane, Washington was
Wow.
fifth. So those are the two specific areas that we buy real estate in. But another thing that we look at, whether we're originating loans or buying the real estate, another way that we hedge the bet on market shifting is we stay under the FHA cap. So that means we're not buying high-end jumbo home loan properties, and we're also not lending against those types of properties, because as markets shift, and we all know it's going to happen, when we stay under that FHA cap, it allows our borrowers to have different exit strategies in the event that values decrease. They could rent them, cash flow them, and then also the properties that we're buying. So that's another thing as fund managers we really look at heavily is, we're not going to lend above the FHA cap, and we're not going to buy houses that are going to sell above the FHA cap, because that also decreases your database of buyers for those types of homes. So that's another way that we, decrease and mitigate risk. We also don't lend 100%. We don't lend above a 70% loan to value. And typically we're not buying properties unless we can get a 15 to 20% return on those properties. So just a couple of side notes on the way that we, because a lot of people, the big question right now is when the markets change, because it's going to happen, how do you guys mitigate that as fund managers?
Yeah, absolutely. And, you've touched on it a little bit, but can you elaborate a little more on your investment philosophy and how you determine whether a deal is worth doing?
Absolutely. So our main goal is to preserve capital. Obviously we want to get as high yields as we can for our fund members, but we also want to make sure that their capital is safe and preserved. So when we're buying properties and also lending on properties, we want to make sure that in the event that, a borrower stops paying or markets change, that we can still get out whole. And so preserving capital, I would say, is our main goal for people. We know it's important to our fund members. People work hard for these retirement dollars that they're typically investing with us, and we don't take that lightly.
That's great. That's really great to hear. And you also spoke a little on your risk mitigation strategy, but how do you generate value once you've made the investment, and kind of give a little bit more on your risk mitigation? Yeah.
Sure. So we, like I mentioned, we're a very organic company in the sense that we create a lot of our own deal flow through our education piece. We've tried outsourcing a lot of things in the past and realized we do a much better job keeping things internal. And with that being said, we actually have our own servicing company, our own foreclosure management and legal department, and our own REO, real estate owned department. And so we keep everything internal. That way we know exactly when borrowers are having hiccups and not being able to pay or just having trouble. And this is one thing, I think private lenders get kind of a bad rap out there that we're just out to make our investors as much money as they can. We also feel just as obligated to our borrowers. We want them to be successful. We want them to make money on these deals, and we are here to help them along the way in the event that they have hiccups. And that's something that our servicing department provides. We know exactly when they haven't made a payment, we're calling them. We have a draw specialist that calls them every month. Hey, what's going on with your project? How you doing? That way, if they are having trouble, we can nip it very quickly and help them, in the event that they need our assistance. And I think that's really important from the loss mitigation side of things. It doesn't mean that you don't ever have someone that you have to foreclose on, but it's not as often as it would be if we were just outsourcing everything and not really having a pulse on what our portfolio is doing.
Right. Yeah, and it sounds like your company is really made up of some phenomenal teams. Really make you guys successful. But are there specific key players involved that allow you to execute your acquisition and asset management strategy?
Absolutely. So there's three of us that are fund managers. I am one fund manager. Our CEO, Lee Arnold, is the second. And then our CFO, Jacqueline Olson, is our third fund manager. So the three of us make decisions, based upon the fund and, as far as what properties we're buying, what loans we're originating. We do have a very strict set of underwriting guidelines for our loans. So we have an underwriting team, an origination team. We meet every week, twice a week for lender committee. So I have a perfect example. We had a loan that was released yesterday. It met our guidelines, but we all had concerns about it. And the 3 fund managers got together and decided we weren't going to fund the deal, even though it did meet our guidelines. So, the guidelines are just kind of guidelines for us to follow, but we are a very close team. We have a full acquisition team that goes out, finds the properties, presents them to us. If we decide we want to move forward, then we move forward purchasing them. We have our own contracting crew that actually goes in and rehabs these projects. And then we have a huge accounting team that helps with all the money flow, which is a huge undertaking. And then we've got, like I said, servicing and then a legal department that are all very important in the just keeping the wheels turning. We meet on a biweekly basis about our specific portfolio, any problem accounts, any accounts that aren't getting their rehab done. We'll talk about strategies for that. So I'd like to take all the credit for it, but there is a huge team behind us that provides us with the information. And, I really do believe that that's the reason our fund has always been so successful. Our fund's been around over 6 years, and we just recently opened up a Regulation A+ fund for non-accredited investors. So for people that aren't necessarily at that accredited status, they can actually start and get involved with a fund, a real estate fund, with as little as $1,000. So we've got some options for the 2 different types of investors that we typically deal with.
Yeah, that's really great. Well, Heather, thank you so much for speaking with us today. It was phenomenal.
Absolutely.
Hear more about the company, and we really look forward to working together.
Absolutely. We're just as excited, and, we really feel honored to be on the Verivest platform, and we'd love to talk with any of your guys' clients that want to learn more information about our company.
Absolutely. There will definitely be a lot who will want to hear more about Secured Investment Corp. So we really look forward to it. Thank you so much.